Okay, we're gonna go over a few charts and then from there open questions, whatever. Um, let's see what I was gonna say. Next week my daughter's off. Tomorrow's her last day of school, which means I will be starting earlier, probably 5:36 in the morning, because she normally sleeps till 9 or 10, so that'll give me time to trade, do webinars and everything. I'll be after that on the hourly charts, so with Forex, because I can't really trade bins with my daughter running around. I've tried and my ITM percentage went to shit. We're gonna take a look at. God, I'm sorry. Let me get a little drink. Sound quality's okay on this. AnyMeeting, for some reason, their website keeps saying they're having an issue starting a webinar, so I just said screw it and I did it this way. If you have questions, you can type them in chat. You do have a mic, so if you want to use it, feel free. But make sure you mute if you're not. Test, yes. And everyone can see the chart on the screen, hopefully. Cool. Okay, so let's go ahead and get with the chart reviews. Again, y'all can use your mic and answer if you want, or you can just type it in. This person is using traps, that's why I liked it. One of the other things they do, just to note, is they're commenting their trades down here. So ITM core qualified Confluence 2, blah blah blah, which is kind of cool. Remember, you can always sign in here and it will save your gallery that you upload to. Alright, so first trade, the only thing I can say, it's a stair-stepping trend. So automatically I would drop this down to a 1 to 3%. Confluence levels, almost every one of their trades they use good confluence. Sometimes it's weak, sometimes it's not, but we'll go over it. Institutional-wise, we can pick up the daily FIBO here, but then we can move over to current, and we have the 161, a daily high. It's just hitting the inner portion of the hourly FIBO, with the markets expanding. But this one for me, they went, let's see, what did they go? 1%. It was overbought, oversold, and stochastics was pretty much maxed out on it if you're using it. Plus, they had it confirmed. So it was a little weak on institutional, but all in all, I mean, for a 1% trade, that's not too bad. It's stair stepping, so I wouldn't complain there. When I say stair stepping, we're getting ABC patterns over and over and over again. Which, if it is stair stepping like that, I don't have an issue with taking it, but I would drop down into a 1% trade. It has the little glasses on it too. What the glasses means is that RSI was also, I believe, like at 90 something on period 3. So over all in all, it's not bad. The trap she set was down here. It looks like I'm not seeing the reason why on that trap. The other trap we see down here, this is a good one. We have a nice round number, and we have a pivot. God, I'm not awake yet. I'm sorry, Murray Math. My daughter woke me up at 5 o'clock this morning, wanted breakfast, so I should be wide awake. But trap-wise, this one I don't see the reason. This one is a good trap down here. So any questions on this chart, we'll move on to the next one. We're going to be going over the traps that they've set to. And the person who sent them in, thanks, I forgot to say that. Okay, so we will close. Next one, you see multiple traps on this one. Let's go over the traps before the trade. This is what we're looking for with the traps, a weekly pivot and a Murray Math line. It's a very nice one. This one would be a weaker trap. It's using, I'm sorry, no, actually this is a good trap. I'm a little confused. She's running smaller, but with bigger here. Murray Math line and a daily 50161 is good. You do have a possible trap here in between the daily pivot and the Murray Math line. I personally would have drawn it right down here in the middle. The next one, not so much. This is just a single by itself, so This one, yes, we have a Murray Math line and a small round number. I'm going over traps because for the summer, honestly, guys, it's going to be kind of funky. I would recommend setting your traps and relying heavily on them. Just for the fact that some days the market's going to be completely flat, some days it's going to be totally out of whack, and then some days we're going to see nice. It's just going to be, there's going to be fewer nice days than there are. There's going to be more shitty days than there are going to be nice days. The next trap, the only one, this is probably the only one I really don't agree with. This one, it's a single institutional, and this one is a single institutional. And unless you're lining it up with like a support and resist off a higher time frame, or you see one, I don't see why this one would be a good trap, or the daily FIBO, because the current market conditions really don't matter on it when you're setting a trap. Other than that, another trap possibility down here, the 127 and the Murray Math just draw it right in between there. As for the trade itself, we had, anyone see what this is right here? I know you can't see the whole thing, but anyone see what we have right here? Prices consolidated, and it's which one, Damien? I'm sorry. This one right here, because it's a daily FIBO 0.0, there's no really support and resist on it. It's just a single institutional level by itself. I would look to see if I could get a support and resist with it, or another institutional, something. I mean, she might have seen something on the chart, but from what I can see on the chart, I'm not seeing why that one would be a trap, unless you just want to know if daily FIBO the daily FIBO was hit. 0 and 100 are strong levels, but like I said, by themselves, I wouldn't take it, because it's not really confluence. It's just a level by itself, and that's this one right here. Cool. No, I forgot. The trade itself, not that pretty. Entry here, we had a Murray Math line. We had a weekly low, a daily low, which we know can get pushed down, which most likely they were getting pushed down from this point on. I probably would have passed on this one. Reason being, we only have a Murray Math as an institutional. We came out of a Bollinger Band squeeze, and this is looking like where it's starting to opening up. So I would have been very leery here. Now, I mean, if you had a shit ton of if you should have had a shit ton of confluence, possibly. But when we're coming out of a BB squeeze like that, and then it starts opening up, this candle here broke the range. I would be watching here, and I definitely would not have entered. Let's look at the reasons for it. Core qualified confluence to institutional levels and a BB. I'm not. Am I missing something? Does anyone else see another institutional level here? I see this one. I don't see any small round numbers, big round numbers. The weekly low, the daily low. Remember, I'd consider them, since they are weekly and daily, they're current. They can move. Those would just be a medium level for current. If it was a previous week or a previous day or a previous month, I would consider that more of an institutional. But on this one, I'm only seeing one institutional, and then current market conditions. Oh, the daily. Here's a daily FIBO and a Murray Math line, so I can see two. Sorry. Is the first candle the best to consider with confluence and breaking out of a squeeze? This first candle here is the one that broke out of the squeeze. This first candle here is where I would definitely not enter a trade. Reason being is this is the one where we have the potential run forming. It looks like we get a weak little run, but this candle here is your warning candle to sit and watch, to not do anything. You see what I mean by it broke the range? It closed lower than all these lows here. So this one, when it closed lower, this goes to itchy, but what you can see here is from the little bit of the chart you can see. What would you say is the momentum on this chart neutral? Is it going up or is it going down? Remember, a lot of times your momentum will determine the strength of this run. We kind of have a neutral, from what I can see, it's zoomed in pretty close, but we have a neutral market right here. It's not trending, nor is it it's not trending in either direction heavily. It's just kind of neutral. We do know that the overall trend. Why am I hearing noises? Oh, I did something else. Yeah, the market's flat, so I wouldn't expect that big of a run, but this is still your warning candle. If it was trending downwards, and if it was consolidating like this and trending downwards, then I would be worried that we'd have a bigger run. But this one, not too big of a run, but still, this is my warning candle to watch. Even with these two, I probably wouldn't take this one because it's the second candle after my warning. I would have probably expected this one to drop even more. Any other questions on that one? Next one, this is GBP USD. It is a 3% trade, core qualified, confluence to institutional levels, support resist, heavily ranging. Again, here we have the stair step. Again, I will trade a stair step. They look nice. This is the trade down here. This was her previous trade, and this is her trade down here. She did set a trap on it. It was daily pivot. It broke a small round number, 0 to 100, so the market's slightly expanding. So this the purple line, she changed her colors, but the purple box down here would be the inner for the 100, and that coincides with the current swing. Overbought, oversold. About the only thing that is lacking on current market conditions is Bollinger Bands, but you got enough current market conditions there. I agree with this one. Daily pivot for me, we all know what happens when I see daily pivots, so I don't have an issue with this trade at all. 3%. Alright, give me a sec, let me shut that off. Sorry, I had to mute somebody. Okay. So with the stair stepping on this one, and again, we just see the ABC over and over again. Not too bad. I mean, the trap was marked. That's I probably would have taken that one actually. This trap don't really get. I had already discussed that before. That was the first chart because this is the first trade we looked at, so we can skip over that. This trap again is legit. AUD JPY. This one looks to be a mess. Okay, so we saw it coming down this way. This was the one with the couple no core qualified at all. Did I miss that? Oh, the next one. This one? Almost, I would say when it hit, because we're 4 candles later, this one might have been core qualified. What I don't like is just the overall structure of this one. That's why I didn't like this trade. Look at what I mean, remember to look at the spread compared to the candle size. It's just now getting in, but if we have a spread of 2.1, that means the brokers can manipulate price by about 1 pip. By the size of these candles, are you ready for a 1 pip manipulation or ready for a 1 pip fudge on price? I definitely wouldn't want to be in these trades. The other thing we see, it came out of the Bollinger Bands, but we don't really see any structure to this. This picked up an ABC, but hell, I would be hard-pressed to visually pick that ABC pattern up. It just doesn't look nice to me. Could you please explain which way the expanding, contracting market matches with the hour of when the swing fits inside the 0 to 100 hour or is expanding? Okay, cool. Let's see. Can I draw with this? Draw. This should be interesting. Give me a sec. Y'all can still see my charts, right? I'm going to try the drawing tools. If not, okay, so 0 to 100 on this is slightly smaller than this. So that means the last hour is we have an expanding market. Ow. If the hourly is smaller than the current range, then we have a contracting market. Does that make sense? You're basically comparing the hourly to the current and whatever the current's doing. Okay. On this one, like here, here's our 0 to 100, so it fits well within this. So what's the market doing? Because our hourly is larger than our current. It's expanding. No, if okay, over for the last hour, it's expanding to a larger range. We can see it by looking at the chart because it's flat and then it's getting bigger, getting bigger. Our current swing, though, the 0 to 100, fits inside here. So we would say it's kind of expanding. Um, does everyone get on this chart though why this is just an ugly one and this is the type of charts you're going to want to avoid? This is the kind of shit you're going to see during the summer. This is honestly what a lot of summer charts are going to look like. They're just not going to have any structure to them. And when I say structure, I mean, do we see a clear range? Do we see any valid... We do have a somewhat of an ABC pattern here, but we get a shit ton of dojis. Candle size is ugly. This is what you're going to want to look out for the summer. We do not want to get into these type of trades. So for me, this one would have been a no-go. Even with the confluence on it, which it was this candle. I really don't even see that much confluence. What did they mark? One institutional level, core qualified, and Bollinger Bands. This just would have been a pass for me. The chart is ugly, plus the reasons we can't stack up enough. USD/JPY. Let me close these so I can see the top of my screen. UJ again. Now, this one is ugly, but not as ugly. What do we see here? Price is moving up, even though the COG is very tight, and it looks like they could have opened up their chart a little bit. Actually, by the spread here, probably not. It looks like it's just a really tight range. What I'm looking at is the Murray math lines, the pivots, and everything are spread out, but this is very tight. So the first thing we look at, candle size versus spread, it's about 1.5. Let me ask, by these candle sizes alone, do you want to be trading this chart? The second thing is our range is very tiny. The trade that she did take, let's look at it, was 3 institutional levels, no Bollinger Bands, strong price action. I mean, I can see, if you look at the end of this candle, this is forming a support right here. For me, this is just a no trade, too small. The range is just too small. Let's look at the technical side of it. So for me, just the chart alone would tell me no, but let's look at the trade on the technical side just so we can see if rules were followed. It's core qualified. We had a Murray, a pivot, and unless I'm missing it, that's 2 institutionals. 1, 2, 3, 4. This is 5 candles later. It's for me. It's core, but this would definitely be a pass. I can pick up 2 cores or 2 institutionals. God, I can't even talk today. I can pick up 2 institutionals, but for current market conditions, just not there for me. Remember, we want current market conditions to match the institutional to try and help out with that, and it's lacking on the institutionals. With a tiny little range like that, I mean, there's just not much you can do with it. Personally, this would have been a pass for me. Next one is cable. Let's go back and look at the traps on this one. Trap-wise, very good job on this chart, though. Murray math, daily fibos, small round numbers, and it depends if you wanted to be alerted weekly high, monthly high. So this whole area up here would be a good trap. This one is, I think what you're doing is you're combining institutional with current market conditions. Remember, if you draw a trap using an institutional and a current market condition, an hour later, this green box might not be there, and and then you'll just have a single one. This one's a good one because we have a daily pivot. Murray math line, just draw it smack dab in the middle. This is a good one, weekly with a round number. This one, honestly, we have an area from the Murray math from to here, and you could kind of use the daily low because you'd want to know when it hits the daily low. And if the daily low does have institutional support, then yeah. If the daily low, weekly low is sitting out by itself, then I definitely would ignore it because remember, that one can just be pushed around. Where your line's drawn, I guess, is okay. I probably would have drawn it a little bit higher, right smack dab in the middle of those 3, but not bad. At least you identified the area. Any questions on the traps on this one? Many 6, not too much. If 1, 2, 3, 4, 5, you mean the number of traps, is it too much? Honestly, if you're getting confluence all over the chart, that would just be happy. That's the chart I would stare at all damn day. So if I could get 8 traps on the chart because everything's lining up for the day, I would have a big boner. I would just be happy as hell. Some days, like Cable, some days for me has done that where I just get. Well, this is UJ, but some days Cable does it for me. It seems like that's the one that works the best for me when I'm setting traps. They just happen to line up a lot. But no, I mean, if you can get a legitimate reason to mark a trap, then there is no way to make too many because they're all legitimate reasons. Next one, Cable. Okay, this one range-wise kind of funky. It's just flat. Looks to me like consolidation. Okay, so on scale of yes or no, anyone would be trading this pair. What do we think of what's the pair look like? Good, bad, no trade, trade. What do we think of this chart? This is kind of what I went over on the other one. Cool. This is what your summer charts, a lot of them are going to look like. This is what we want to avoid during the summer. Overall, call stronger. We have an overall upward trend, which you can't even see it. I'm sorry, call stronger, so that means, yeah, call stronger. We have an overall, I'm very bad today. Overall, we have an upward trend. Can't see it though, but this is just too flat for me. It looks like consolidation. I mean, what kind of pattern you can't see any type of pattern. You can't see an ABC. This is the first ABC we see. ABC we see. That just sounds lovely. Um, for me, this would be an avoid chart. I would mark it with my traps, and I would be looking for price action to shape up. Just when I say price action, we don't even have to get fancy. I would like to see something like an ABC, some candlestick movement. Not all these. If you see, I guess if you're a beginner, if you're seeing dojis, hammers, pin bars, shit like that, and a lot of them, that's a big warning sign. If you're not sure, post the chart in chat, and if I'm around, I'll answer it. If not, I mean, we've got enough people that know. But look at this isn't normal to have this many pin bars and dojis. When you see a lot of them, it's a warning to stay out. If we see a flat market like this, it's a warning to stay out. Trap-wise, let's take a look. We got this trap again. I think she, whoever it is using current market conditions with institutional. So let's drop that. Try and stick to just institutional. This one looks like a really good support line combined with a Murray Math. So I do agree with this one. Everyone sees the support over here with a Murray Math. That is a good trap. Next trap down, we have support, support, support hit and broke. We have a small round number with a Murray Math. Now, even as ugly as this chart is, I could see the reason for taking this trade. It's not core qualified, and I doubt it was during the time. Okay, it should be even put not core qualified. As ugly as this chart is, I could see the reason for the trade. Because we have the support right here. So for me, that's one strong reason. Here's a small round number is 2. And a pivot, which is 3. So I can come up with 3 there. If we look at current market conditions, 0 to 100, almost matches here. So we can, but just looking at it, the market's not expanding or contracting. It's holding steady. We don't have momentum up or down, and we had a breach. Wasn't overbought or oversold either. I know I said this is a chart I wouldn't take. If the candle size was a little bit bigger, this is probably a trade I would have taken. It's a very nice, just support and resist, lining up with confluence trade. It is one of the few times. This one I would be really hard pressed. I would have had to seen the chart, so I'm not going to judge this one. I would say if price action was nice, I probably would have taken this. So I'm not going to judge this one good or bad. Confluence-wise, great trade. I'd have to see the charts. Everyone understand why this one is hard for me to judge, because I would have had to see the chart moving to see what was going on with it. I couldn't just from a static picture. A static picture, it's actually a very nice trade, even though it's not TA core qualified. But it is a very nice trade. If you have any questions on that one, let me know before we go. Because, again, during the summer, and I'll get into it a little bit more as market conditions. Since my daughter's going to be asleep, I'll be a little bit more active in the morning. as in trying to show some non-core trades, but some things that will work during the summer. Again, though, with the summer, if we're seeing erratic shit everywhere, I won't be trading that, and I'll be focusing on the 1 hour charts. But feel free to ask questions, post charts, guys, during the summer. The summer is honestly a good time to learn. It's just a little harder to trade. Ask questions during the summer. You're going to get a lot of examples of crap, and that's honestly one of the best times to learn, is because you're going to have a ton of crap to learn from. And I know that sounds bad. Sometimes I have a great trap, however, candle hits it on the first minute and price begins to retrace, advise. If it starts to retrace, I covered this before. Let's see if I can find one. Okay, so here's an example of one right here. Is this what you mean? Like, here's the entry candle, here's our trap, price hit it and retraced, right? That's cool. We just happened to get one that was exactly what you're looking for, I think. Okay, so if price hits this and begins to retrace, we have 1, 2, 3 institutionals here. Now, most likely you're not going to notice the retrace until it's somewhere, I'm guessing, between DS2 and the daily FIBO. So what I would advise is, if you want to break the time rule, if you want to break it, now your target entry would be below this, but you're not going to hit it. So if this is your target entry and you just have that feeling it's going to retrace because you did hit it. This was a monthly low, weekly low, daily FIBO, DS2, and blah. So I could understand why price would hit this and bounce back up. Then your entry goal would be one of your institutional levels. You don't want it to be the highest one. Preferably it's the lowest one. In this case, it looks like it bounced fast, so you'd be shooting for entry between 161 and DS2. You would want your entry in between here if you're going to break the time-based rules. If you're going to break the time-based rules, drop to your institutionals and try and pick the lowest one. Now, that being said, I mean, just be careful, because sometimes it'll drop, bounce up, and then drop hardcore again. In this case, I wouldn't have a problem with it. My entry point would be somewhere between 161 and DS2 and daily support 2. Do you see what I mean? If you want to break the time-based rules, then use your institutional levels as a guide for your entry. You just want to be below the majority. There's 3 of them here, so this would be our ideal one, but we could get entry below this one. Does that help at all? I'll be honest, I break the time-based rules a lot, especially when I have 3 institutionals. My goal then becomes to get entry below those. Nope. My entry would have been on this candle, and it would have been somewhere between this green and this aqua line. And I most definitely probably would have broken my time-based rule here. If you have 3 institutional levels lined up, I would be on the watch out for a heavy bounce, because a lot of times you're going to see a heavy bounce. So just be aware and be ready for it. If you jump to it and you see 3 institutionals, or hell, even if you have 2 and you see a major bounce coming, and if it hits it and it starts moving back up, if there's anyone new in the room, ignore. If you're asking this question, I'm assuming you've been trading long enough now where you know about the time rules. Shoot for, like I said, shoot for entry between here and here. The closer it gets to here, the crappier of a trade it is. If you can notice that it's bouncing back, though, once it hits this level, get your entry. Honestly, if you're noticing that, then I'm confident enough in the fact that you can get entry. Most people, they wouldn't notice it and they would just pass on the trade. So if you're asking the question, you're noticing it, so I think that you're capable of getting entry. Yeah, it is a little tricky. Demo it, or just mark on the chart where you think you would have taken it, but be honest with yourself. Could I have gotten that entry? Don't just say, oh, yep, here's my area, I could have got entry. See, do you notice it until after the fact? If you're noticing it before the fact, then yeah, you're ready. If this is an after the fact thing, now that you're aware of it, watch them and see if you can do it. I probably, on my trades, and I hate to say it, but probably 50% of my trades are not time-based. I use the institutional levels. So, yes, it will help your trading once you become aware of it and you can do it, but test yourself first. Keep the journal, mark it down on your journal saying non-time-based, institutional-based entry. But you've been here long enough. And send me your charts if you have questions about it. Again, I don't mind looking them over to help y'all. Last one, this is AJ. This is borderline. We have the candles. What are we missing here that makes me say this one isn't completely shit? compared to the other ones. The other ones had a lot of... So the first thing I'm doing is looking at market conditions. The other charts, comparatively, if we look, had this chart. Do we see the difference in the two? Why, yes, we have a little bit of a range. We're missing a ton of freaking dojis, pin bars, and things like that. The candlesticks are generally bigger. Yes. We're still seeing a few dojis, but nothing like that other one, and overall the candlestick size is a little bit bigger, so we're not just, it's not playing fucking ping pong back and forth. We actually can see a little bit of structure here. Price is moving from the top of the cog to the bottom of the cog, and it's moving to the top, and then it's slowly moving back down to the bottom. So we can see a little bit of structure here. Now, as for the trade itself, I keep wanting to click OK and get rid of this goddamn thing so I can see. It looks like this was a good support and resist area. Price, no current swing. This was the top of the hour. No, it wasn't. This is the, yeah, this is the top of the hour, actually, if I had to guess. 1, 2, 5, 10, 15. I'm counting something. 5, 10, 15, 20, 25. Nope, this is at 40 minutes in, so... Okay, 40 minutes in, this was her entry, his entry, whatever. We all know it's a her now, so... Okay, this was the entry candle. I try and keep everyone anonymous when I'm doing your charts, because some people are embarrassed to turn in their charts, and that's a big problem I've been having, is people don't want to turn in their charts because they're embarrassed for me to see them. Don't be embarrassed, guys. That's the worst thing you can do. Give me your damn charts. If they're ugly, I'm not going to be a dickhead unless it's 3 weeks in and you're sending me the same shit over and over. I'll be extremely nice. I'll help you along. I try and point out your overall weakness that I can see, and then what we can do to work on it. So don't be afraid to send me charts. On that note, the trap is a support and resist. We have a small round number and a Murray math line. Price touched it here, and then it continued and broke through. Don't know if it reversed there. Honestly, this is a decent trade. It's a little... I'm guessing it was more core qualified because price moved up, so that opened up the cog a little bit. We had put was stronger. She followed the put. Sometimes the market's just not going to work with you. Out of all the trades, and I hate to say it even though this is a lose, chart structure-wise, it's not perfect, but so far it's probably the nicest chart structure I've seen. Reason-wise, let's count them. We have a nice support right here. Resist, yeah, I'm backwards. Resist here. We have a Murray math, a small round number. Price hits it. We were overbought. Stochastics was maxed. I wish I could see your value charts back a little bit farther. If your value charts is doing this, just change time frames and it'll populate here. So if it's doing this and you're on the 5 minute, click to the 1 or the 15 and then come back to the 5 and it'll populate. What I would want to see, and I have the feeling, is I bet value charts popped on this candle, which would be a warning to watch out for early, basically the early little run. Other than that, I mean, this is not a bad trade. You lost, big deal, move on. Not a bad trade at all. Again, if for value charts, change time frames, it'll populate it all the way back, because I would really want to see what happened on this candle here. This candle here may have been a warning for me. Other than that, traps. 1, 2, good reason here. This one is a support and resist one. I have the feeling you're drawing support and resist traps, and I may have been a little too harsh in judging there. So that's good that you're drawing them. This is a Murray math with a support area, a resist area, or support, depending which way price is going. We have an SR area here, SR area here. This one's a very nice one. Support and resist area here with a small round and a Murray math. Just didn't happen to work out. Don't be upset. You had marked it correctly. Other than that, any questions? The Facebook page. While you have questions and you're typing. The Facebook page next week, I'll try and get that going. What I would really like, if we have someone that trades Asia, the natural support and resistance is the same as Confluence's levels. Yes, on the 5 minute time frame, I would give a support and resistance like this about a medium impact on it. If it's from a higher time frame, like if you're lining up 1 hours or if you're lining up higher time frames, I'd give them a higher resistance. So 1 hour and a 4 hour resist, I would give that a higher, like a medium high, medium / high. But on the 5 minute charts, I'd give these a low to medium, unless it's a really, really strong one. That one will take a little bit of judgment call on your part, but you can always, again, mark the chart, send it to me, and say, what do you think of this support level? But generally speaking, if you're seeing the support and resist on a 5-minute, and it's just a current swing, that's a low to medium. If you're seeing like this I would give a medium. Down here, this would be a medium, because it is holding. I wish I could see more of this chart, because I would say if this was a third breach, I would have been leery on it too. Back to what I was saying about the Facebook group. If you have questions, keep typing while I'm talking. The Facebook group, I'm setting that up so that for the U.S. session, I'll review the charts, and I'm going to put up on there like green, red, yellow, and you can vote on how you think it looks too. If someone trades Asia and wants to help out, I would love it. You don't have to do it every day. You do it when you can. If you're trading, jump onto the Facebook page, put up Asia, and you put up the market conditions, what you think of them. If there's a okay, for Asia, I can't help a lot, but since it's summer, my daughter's gonna be out a lot during Asia, so I might be able to trade Asia a little bit more. We did pick up a couple U.S. guys that can only trade Asia. I need to get the guy into the Skype room because he's gonna be trading Asia every day. I would love to get that in there. If you want to volunteer for the Facebook page, all you have to do is throw up what you think of the charts for the day. Let's see if I can find it real quick, and I'll show you on my screen. And I'll show you how easy it is, and this is all you'd have to do. So I'd need someone for London, someone for Asia, and I got US covered. And let me see if I can find it real quick. I'm on my other screen, so give me a sec. And I have to finish setting it up, so yes, it is ugly. Okay, so let's see. Okay, so y'all can see it. It's right here. Market conditions 525. So all you'd have to do is ask a question, and then you would do add poll options. So you just good God, I'm all jacked up. Just so you can see what I'm asking someone to do if you want to do it. You just go up here, ask a question, and this is 528. You do add poll options, and you type in red, yellow, green. Allow anyone to add options, that way they can add on a pair if you want, or you can just do it this way and they can comment on it. So we can keep it red, yellow, green. Then you hit post. Once it's posted, all you have to do is, and you'll be an admin, so you just go to here and you do pin post. That'll keep that post at the top for the day until that session's over. I forgot to add US on there. But that's all I'm asking. If anyone wants to do that for a session, feel free to hit me up on Skype and we will go for it. Good Lord, my mouse is a mess. Other than that, any other questions, guys? Again, next week I'm going to try and be on earlier as my daughter will be off school, so I'll probably be starting at 6 a.m. instead of 7:38. Webinars will all be bumped up by an hour or two, so they'll probably start at 7. So for any that are different time zones, the webinars will be starting early. 6 to 7 is a good time to trade. 7 to 8 for me is wishy-washy because that's when US pre-trading kicks in. That's why I'll be doing webinars during that time. But if not, and the Google Chat thing, is this fine with y'all? Because any meeting seems to be screwing up right now. We can do it this way again if you want. Let me stop the recording.